Hello, all the CA into students. Hope you have done with your law examination very well. Again, the same thing. Forget about the past. Let's focus on the direct taxes paper. Indirect taxes, I am not the correct person to tell, but for the direct taxes, definitely I can guide you with the best light possible. Today in this lecture, we are going to start with a quick revision of a 6 marks area income from house property. And this will also reflect in one or two adjustments in the total income computation question. So the weightage can be somewhere going up to 6 to 8 marks in exam in that 50 marks, which is substantial. So let's start with income from house property and complete every single nook and corner in the chapter very fast. Without any further delay, let us start with a quick revision of entire chapter income from house property. Let's see. Income from house property, with regard to that, section 22 will be the charging section. Section 22 will be charging section. What this charging section said, one by one, let us go. Each concept, I will not be spending more than 1 minute. Okay, absolutely from exam's point of view. Whether theoretical question may come or a practical question may come, you will be acing the examination with extreme confidence. Okay, let's begin. Point number one, annual value taxability. Nowhere in income from house property they say rent is taxable. No, annual value of the property will be taxable. What does it mean? Actually, what you received is irrelevant for me. There is a inherent capacity to earn. Means if a particular building has a capability to earn 1 lakh, but you are charging only 70,000, right? But lawmaker wanted to tax that 1 lakh. It is your mistake of charging 70. That's why they use the word taxability is not on rent actually earned. It is on annual value calculated under section number 23. Number one. Number two, very, very important, property. Income from house property, not every property. Therefore, it should have a building. House is a building. Building and attached lands appurtenant thereto. Both together a building. So, there should be a building and lands appurtenant thereto. That is only subjected to tax. Therefore, under the head income from house property, building or any lands attached to the building are becoming taxable. Okay, immobile property not having a building or vacant lands, intangible assets are not taxable under IFHP. Next one, ownership. Another very important condition of income from house property is the assessee must be the owner of that property. When I say owner, exam questions are coming on this point. Please listen carefully. When I say ownership, he need not be registered ownership. If he is a registered owner, fantastic. Even if he is not a registered owner, if he is a beneficial owner of that property, simply to tell he is having control over that building and that lands appurtenant thereto to earn income. Though the documents are not registered in your name, income will be taxable in your name only. So ownership is important or not important? Absolutely important. If you are not a owner, chargeability under IFHP will not come. But that ownership need not be registered ownership. Okay, need not be. If it is registered ownership, well and good. Sometimes registered ownership may not be there, but I am having full control over that particular building. Possession rights are there with me. I can give it to rent and I can earn revenue. In that case, even though the property is not registered in your name, income from house property will be taxable in your hands. About that, one case law is also there. That is not required for this quick revision. Next one. To whom this will be taxable? Assessee of any kind, because the Bare Act section number 22 uses the word assessee. That's all. Individual HFA they don't tell. So assessee can be the house property. Income can come either to resident or non-resident individual, HFA, firm, company, etc. Anyone. Next one. Purpose not for business. Very, very important exam question point again. Listen. One important thing is, whenever I say income from house property chapter, this table is required for you to understand. Instead of reading this entire thing in regular class, for summary, I will tell this. When IFHP is taxable, situation, business or profession, others. Business or profession, here I have written, assumed that business profits are chargeable to tax. Okay, now listen. Self, okay, self, others. Means what? IFHP, there is a house property. There is a house property. Used by whom? Self. For business purposes, no sir, not for business purposes. Listening, not for business purposes. Next, sir, there is a house property used for self for other purposes, for others. Simply to tell, I am not using for my purposes, self purpose, but for other purposes other than business or profession. Other than business or profession. No, sir, I have a house property. Others are using it for their business. For their business. Next, others are using for other than business purposes. One by one, I will explain. Exam, like critically, they are asking questions on that. Students are committing mistakes. Let us understand. There is a house property. Okay, there is a house property. Used by whom? Self. For what purposes? For business or profession. Now, what is this? No, that particular annual value is not taxable under that IFHP. PGBP it will go. What? PGBP it will go. I repeat. Listen carefully. There is a business or profession. There is a business or profession. My business or profession. That's why self. For self, business or profession. Okay. Self for other purposes. I have given it to others for their business. I am giving it for others for other purposes. Means how to understand this matrix clearly? 4 possibilities are there. There is a house property. I am using that property for my business. For my business. Now, that particular annual value will not be chargeable under the IFHP because you are not using it for any other purpose. For your business you are using it. Under the head PGBP, you will claim depreciation on that property. Therefore, in PGBP again you can't claim notional rent on that. So under the head PGBP, no notional rent is allowed. You can claim depreciation at the rate of 5% or 10% as the case may be on the buildings. Okay, so since you are already taking a depreciation advantage in PGBP, like a self-occupied property, again you should not take a benefit in house property. Therefore, any question that comes in exam, you are using for your own business means IFHP will not get attracted. Second situation, I am only using for not for business. Yeah, I am only residing or I am visiting. I am only residing. Are the other purposes? IFHP, yes, self-occupied property. Next, I am not using, others are using. Means I have given it on rent to others. Oh, what they are doing in that property? They are doing their business. Now again, yes sir. Sir, you said business PGBP. I said if assessee has a building using it for his business, then for him PGBP headline taxable. Okay, depreciation can be claimed on that building. Listening, but there is a house property. Yes sir. Self is using no, he has a let out to others. Oh, what that others are doing? Some other person, they are using it for business. Yes sir, IFHP. They are using for other purposes. Yes sir, IFHP. You gave it for a family for rent, this category. You gave it to Mr. A using it for his business, then also house property loan taxable. Understood? Done. Next one. When there are so many portions in a building, each portion is subjected to tax separately. Entire building ki one taxability will not be there because some portions you can give on rent, some portions you can use it for your own purposes. That's why occupancy or annual value shall be calculated portions wise of a building. If SSC self-occupied a portion of a building, remaining portions can't be claimed again as self-occupied property for the same assessment year. For example, building is 4 floors. Each floor 3 compartments, 3 portions are there, and 12 portions. In 12 portions, you will have hands and legs. In one property, you will claim, or 2 properties maximum you can claim. Then all the remaining are let out properties or deemed let out properties. So one building you should not take. Okay. Next. Important. Last attempt this question came. That's why please listen carefully. Don't do overaction while listening to this chapter here. Important. Property can be a foreign property also. Okay. In such a case, annual value is determined as if similar property situated in India. Means what? If a assessee is a resident having a foreign property, it will also be chargeable under the head IFHP only. How? We will see one question also. Ownership shall be seen in the previous year, not in the assessment year. Means in the previous year 24-25, I have a house property, I generated rent. This year I have to pay tax now. April 1st, 2025, I sold the property. Means for the assessment year 25-26, I don't have property with me. Still it is taxable because taxability is on the basis of previous year, not on the basis of assessment year. Next point. Disputed ownership. Which ownership? Disputed ownership. Okay, let us understand one point. These are all theoretical questions they will ask for 2 marks from this chapter. Let's understand. There is a property. I am self-occupying it. I am self-occupying it. Or completely it's vacant. I am not at all using. But still annual value will be taxable or not? Now the question is, there is a property which is self-occupied property, but two people are fighting for that. A is telling that this is my property. B is telling that this is my property. There is a dispute in ownership. Court we went. Till the court give judgment, income tax department will determine the ownership. Means A, B are fighting. One is saying that this is a self-occupied property, I am the owner. B is saying that I am the owner. Both are fighting now. Generally this happens between the brothers, family level. Both are fighting. Department will tell that, IT department will tell that, B, you are the owner. A will tell her, how can you tell? We filed a case in court na. Till court give judgment, I will tell B is the owner on the basis of the facts that I have till now. If court gives a judgment in favor of A, let's A continue that. If B na, anyway you are there, you will continue. Next, there is a let out. It is very, very important. There is a let out property. On that let out property, two brothers are fighting. A is telling my property, B is telling my property. Both are fighting. Whose ownership it will be? Same logic again. Person actually earning income shall be chargeable to tax. Okay? Person actually earning income. A, B, who earned the income? A, you earned? Yes, sir. Then you are the owner. B, you earned? Yes, you are the owner then. Till the court give a proper judgment, who earns the revenue, that fellow will be taxable. These all two things are based on Keshadev Chamaria case law, Calcutta High Court, and Franklin versus IRC. These are the two case laws that happened. Okay. Only important things I am going to cover. So please listen. Next thing, building means we always get our house property. No. Building includes residential property, let-out property, self-occupied property, factories, auditoriums, anything is a house property only. Okay. Lands appertinent there too. Means what? There is a building. Attached lands will be there. Na? It includes courtyard, walking track, gardening area, public area, playground, etc. Commercial nature, na, car parking, land connected to one building to another. Two buildings are there in same land. They constructed one flyover type from one building to another building, like Malaysia, like Kuala Lumpur, Madri. So that one. Lands appertinent means it is indivisible and shall be the part and parcel of the building. Okay. Very, very important case layer. This can be tested as an MCQ. MCQ, this can be tested. Let me explain fastly what happened in this case law. Okay. I will explain. There is one assessee called as Ramalakshmi Reddy. What happened is, she is having one very big land. In this land, she constructed a small building. Okay. There is a connected well. Lands appertinent, one well is there. Okay. Lands appertinent there too. So there is a well in the land appertinent to the building. Very good. From this well, she is drawing the water every day. It's a perennial well. You go and draw, like Akshay Patra, it will be coming out. So commercial buildings will be there. Now for them, they want water because from ground, they don't get that much water for a 20-storied apartments. Therefore, what these apartment persons have done, they have went for a commercial transaction with the Ramalakshmi Reddy. What they have said? They said, Madam, your house has an appertinent well. From this water will be drawn. You do one thing, 100 drums full of water, you also give us a chance to draw. Every month we will pay you some good amount of money as a income, as a payment for that water that we are drawing. Okay. Electricity or motor that is required to suck the water from down, that all we will only bear. For giving us the chance to draw the water, and for the water we are drawing out, we will be paying you some money. This is what they contracted with her. She said, okay, taken. Now that income, anyway, house property, self-occupied property, undoubtedly, that income generated out of that well is there, na? Well, that she wanted to treat it as an income from house property, add it to annual value, and take a standard deduction of 30%. Department said that assessee is selling water. Selling water, that has nothing to do with the building. Act uses the word buildings and lands appertinent there too. Okay. Rent should come. Annual value of building will become taxable. This is a commercial transaction, taxable under the head PGBP. Okay. So conclusion is not chargeable. Income from subletting. Income from subletting. A lets to B. B lets to C. What will happen now? See. A lets to B, taxable under the head IFHP. Taxable under the head IFHP. B lets to C, that will be taxable under IFOS. Huh? Why, sir? Both are letting. Na? You are letting, I am subletting. You are the owner, but I am not the owner. Letting out by owner is IFHP. Letting out by non-owner is a IFOS. Next issue. Transfer of income chargeable in whose hands? Okay. I have a property, or Mr. A has a property, house property, owns. He is having a salary of 10 lakh, house property income of 5 lakh. This income is transferred to Mrs. A, wife. Now, who will be taxed? Transfer of income without transfer of ownership. Income from house property is charged not in the hands of Mrs. A, since ownership is still retained with Mr. A. Next. Deemed owner. Next section. Section number 27. Now we complete section 22. Now we are going to section number 27. Finally, last 15-20 minutes, I will do problematic part also. Full confidence, 6 marks pakka, just in 1 hour. Let's see. Concept of a deemed owner. Section number 27. Transfer of house property to spouse or minor child. Condition 1. Assessee is an individual. Because spouse can't be there for HUF and companies. Na? Company will have spouse. Huh? See. Assessee is an individual. He transfers his house property. Okay. House property. Transfer is made to spouse. Okay. They are divorced now. At the time, if you transfer, this will not get attracted. There is no agreement to live apart other than agreement to live apart. He transferred to spouse. What he transferred? He transferred house property, not income. Previous example, income. Now property he transferred. Or to a minor child other than minor married daughter. Transfer is made without adequate consideration. In this case, the person who transferred, that person only will be deemed to be the owner of the property. Though you transferred ownership to your wife or spouse or to a minor child other than minor married daughter, without adequate consideration, I will treat it as the first person transferor is deemed to be owner. Next. Examples I am not going to deal here. Time waste. Time waste means, see, this much hard work I have done for regular classes here. Now 1 hour I have to complete means these all things I can't now take and explain. What is this clubbing, 64(1) what will happen, income escaping assessment section 142 what will happen. Those all things, this is not correct time. Okay. If you want, what I will ask student is, take a pause, see the example, you can understand if you really have a doubt. Okay. You can pause. Notes also you can pause. Next. Holder of an impartible estate. Like that you remember, this is not a time to learn what is impartible estate. I have to explain all this example now. So, holder of an impartible means non-dividable estate. In whose name it is there, that person is deemed as a owner. There are 4 owners to the property. But document only number 3 name it was registered. Now for the purposes of house property chapter, he only will be treated. Provided if it is an impartible estate. Impartible means a non-divisible estate. That's it. Beyond this, I can't explain and spend the time on this. Property held by member of a cooperative society. Listen, conclusion I will tell you. Whenever property is held by cooperative society, cooperative society will construct it. Who will construct it? Cooperative society will be constructing it. And technically, if you see, registration is made in the name of cooperative society. It will give it to all its members. Though registration is done in the name of cooperative society, since the members are really getting the benefit out of that property, members' it will be taxable, they are deemed to be the owner. This is what held in Monarch Citadel Private Limited versus ITO, read with section number 27, class 3. What they said, once the member of cooperative society is deemed as the owner, irrespective of real and legal ownership, member is only assessed to tax under section number 22. It is what said in section number 27, class number 3, read with the case law Monarch Citadel Private Limited versus ITO. Next, ownership under power of attorney transaction. Ownership under power of attorney transaction. Okay, let's see what it is. See, there is a section under Transfer of Properties Act, section 53A. That section 53A says that if registration is done under section 53A, okay, even though payment is not fully received, and registration is still pending, since you satisfied the conditions of 53A, the person who has promised to pay the consideration, simply the transferee, will be deemed to be the owner. Beyond that, let's not waste time. See, in case of section 53, see, if a house property is transferred under section 53 of TOPA means Transfer of Properties Act on the basis of registered agreement and where consideration is paid or partly paid, then irrespective of registration, transferee shall be deemed to be owner. Next. lease transaction under section 269 UA clause F. What it is? So let us see. Whenever A sold property to B, B becomes the owner. From then, income from house property is taxable on B. Correct? To escape this, some people are making a smart tax evasion transactions. To counter that, this 269 UAF is introduced. What is it? See, I will transfer house property to you. I am A, you are B. I will transfer to you. Then you will become owner. So I don't want you to take the tax burden. What I will do, instead of selling you, I will be leasing the property to you. I will be leasing the property to you. Law says like this. There is a transfer of house property by way of lease. Very good. Lessor transfer the house property on a lease term of not less than 12 years. Means the lease period is minimum 12 years lease. Minimum 12 years lease. Sometimes some smart people, what they do, they will give for 6 years. Again, clause will be there. And in the terms and conditions of that lease, there will be a clause extendable by another 6 years. In that extension, more than 6 years is there. Now, 6 plus 6, 12 years. That's it, gone, over. This will also be treated as 12 years only. Means lessor transferred house property on a lease term of not less than 12 years. Either singly more than 12 or 12 or more than 12, or aggregate of all extensions should be more than 12. But sometimes lease will be given on month retainment. Means 1 month lease I will give. After 1 month, if you want, you can continue. Or else I will give to some other person. After 3 months again you can take. Though those aggregate 12 years should not be counted. You only should take continuous extensions, it should be 12 years. Then that will also be treated as a deemed owner. Lessee will be deemed as a owner. Okay. This was happened in section 269 UAF, read with section number 27.4 and read with another case law called as Yagnavati Jaiswal Family Trust versus ITO. This example I have given. If you want, you can read. This was held in the case law called as CIT versus Pelican Investments Private Limited. This case law. Okay. You can read later. Next question. Section number 26. Property owned by co-owners. Property owned by co-owners. Property must consist of buildings. Property is owned by 2 or more persons. 2 or more persons. Sir, whenever co-ownership is there, percentage of ownership will be given. 40-60 or 60-40 or 50-50 or something. The respective share of each person is definite and ascertainable. It should be definite, ascertainable. Then respective shares is taxable independently under the IFHP and not as an AOP. Okay, done. 26 section also over. Next comes the hero of this chapter, section 23, determination of annual value, the computation sheet. Okay, okay, listen. There are 3 kinds of rents. One is municipal value, fair rent, standard rent. One is municipal value, fair rent, standard rent. Value decided by any local authority is called as municipal value. The authority, local authority, for example, in Hyderabad, there is GHMC, Greater Hyderabad Municipal Corporation. Like that, Chennai also it is having. Chennai, some Greater Chennai Municipal, something will be there, that one. And next one, fair rent. What is the next one? Fair rent. Means, what is the value of rent that similar properties in that locality will be charging? That will be called as a fair rent. Third one is the standard rent. Means what? This is the maximum rent that can be charged on a property in that locality as per the Rent Control Act. This was held in Sheila Kaushik versus CIT. In that case law, standard rent is there. That's why when you see the Bare Act, you might not get this question any time before. Why nowhere in Bare Act in section number 23 I find the word standard rent? But faculties are always telling standard this you compare, whichever is lower, this you compare, whichever. Like that, nowhere it was written, it will not be written. Do you know why? That's a case law actually. Supreme Court it happened. After that, traditionally everyone is following the same pattern. Start again. Municipal value, fair rent, standard rent. 3 rents will be given. Okay. Next. Computation sheet. Computation sheet. Let us see how. Let out property, I am showing you the format. Which property? Let out property. Number 1. Gross annual value minus municipal taxes. Municipal taxes, when I say municipal taxes actually paid by the owner should be deducted. Paid by tenant should not be deducted. Okay. That's called as a NAV, net annual value, not net assets value, net annual value. From this, there are 2 deductions. One, standard deduction at 30% rate, interest on capital borrowed, actual capital borrowed, accrual basis, accrual. Even though you do not pay, no problem. Payable, yes sir, that's it, you can deduct it. Okay, Don't ask extra questions. This is not the time. There are a lot of case laws. I will show you 5 pages notes I have written on that. Taxable value of IFHP will be the final. So tell the computation sheet, tell all the computation sheet, gross annual value minus municipal taxes net annual value minus deductions under section 24, standard deduction and interest on capital borrowed, taxable value will come. From this one very, very important thing. Okay, see, standard deduction is given at 30%. What does it mean? I will not give any other deduction other than that. See, there is a small logic in income tax. What is that? If income is taxable, expenditure you can take it as a deduction. If income is taxable, expenditure you can take it as a deduction. Income is not taxable, expenditure on that income we will not also. Here, income is taxable, gross annual value of the property or net annual value is becoming taxable. Since property annual value is getting taxed, I will allow expenses as a deduction. But if I start giving expenses as a deduction, our Indians, you know very well what they will tell. Sir, painting, I spend 2 lakh rupees in a year. Okay, gardening, I spend 1 lakh in a year. This one, I paid this much to this. For maid, for maintenance of my property, I paid her 5,000 per month, 60,000. Like that nonsense expenses we will charge. Lawmaker said that I will not give you any expenditure. I will give a standard deduction of 30%. Means what? You spend 1,000 crores. I will give only 30%. Okay? I will give 30%. See, 30% of what? Net annual value. Net annual value is 10 lakh. 30% means I am giving you 3 lakh deductions. How much? 3 lakh deduction. Means what? 10 lakh value. 3 lakh rupees you spent on expenditure on that maintenance of that property. Separately, don't show me any breakup. What do you mean by this? There are only one and only two deductions only available. One deduction standard, rent, interest on capital borrowed. Where is it? So there is no other third deduction available. At first you should keep in mind, examiner, they are literally torturing the students with the wrong adjustments. Okay, so standard deduction, interest on capital borrowed. Now, what is the step 1? Gross annual value of a let out property. How to calculate GAV? As per institute I am telling. Okay. Gross annual value calculation. Step 1. Calculate reasonable rent expected on the house property. Okay. For that we need to compare MV, FR, SR. MV, FR, SR. Sir, how sir? Step 1, this one I have written. Computation. Identify the municipal value. Identified, sir, they have given in the question. Identify the fair rent. Yes, sir, I identified, given in the question. Identify higher of MV and FR. Higher. MV, FR, whichever is higher. Yes, sir. MV higher or FR higher. Okay. Compare that with SR, whichever is lower. Whichever is lower. First one, whichever is higher. MV, FR, whichever is higher. Resultant and SR, whichever is lower. In simple, MV, FR, whichever is higher. From this one will be selected that with SR, whichever is lower. This will be called as a reasonable expected rent. Also called as a reasonable expectation. Okay. Next. Okay, sir. I calculated step 1. Second, calculate actual rent receivable after deducting unrealized rent, but before deducting loss due to vacancy. Very important adjustment. If you do mistake here, Gangar, Panam, 4-5 marks over. See, actual rent receivable. Okay. For example, 60,000 per month, or say for example 10,000 per month. 10,000 into 12, 1,20,000. That's the actual rent receivable. Okay. Minus how much rent you did not realize, 20,000. Deduct that. 1 lakh will be considered here in this step. Okay. URR shall satisfy 4 conditions in rule. What is URR? Unrealized rent. Which one? Unrealized rent. So what are the 4 conditions? I did not write separately. Just understand. Bona fide transaction should happen. Really, that fellow should not pay you the rent. It should not be a little like humbug amount should not be there. Actually, the tenant has defaulted to you. Such a kind of actual unrealized rent you should. Okay. But before deducting loss due to vacancy, this I call as basic value. S1, S2, whichever is higher. Again, see. Municipal value fair rent, whichever is higher. Resultant SR, whichever is lower. Reasonable expectation came. That you compare with ARR minus URR. Actual rent receivable minus unrealized rent. Okay. That value will come. With that you compare again Okay, with that you compare again, and finally you will get the value whichever is higher. So MVFR whichever is lower, resultant with SR whichever is high. Listening, MVFR whichever is higher. Take that. Next, that resultant with SR whichever is lower, reasonable expected rent. Reasonable expected rent versus, okay, ARR minus URR amount, whichever is higher again. Step 1 or step 2, whichever is higher. Then compute the loss due to vacancy. Compute the loss due to vacancy. In a year, 9 months I took it for my self-occupancy or let out. Sorry, not self-occupancy, let out. 3 months it is completely vacant. No one is using it. A 3 months loss you can reduce from the resultant amount. Final amount you obtain is called as gross annual value. Is called as what value? Gross annual value. S3 minus S4. Let us see an illustration now. From here, questions answer will start for you. So let's continue with the illustration. From here, illustrations will start. Okay. After that, some discussion will be there on annual value. Further discussion for 5 minutes. After that, straight away, let us see self-occupied property valuation and interest on capital borrowed adjustment. That's it. After that, it is entirely with you to do at least 5 questions from your study material and RTP, MTP. That's it. You are an expert in that. You can go to the next one. After this, I am going to upload PGBP important adjustments. Which one? PGBP. Important adjustments in PGBP. Depreciation concept. All these things, short videos I will be uploading, which will give you definitely a 15 to 20 marks in the exam. Okay. Let's concentrate on the question. Municipal value, fair rent and standard rent. Okay. How to do comparison? Municipal value, fair rent, whichever is higher, 46. Compare with standard rent, not applicable, 46. Next one. Municipal value 40, fair rent 46, whichever is higher. What is the higher one? 46. Compare with 45, whichever is lower, 45. 40, 46, 46, 35. Compare with 35, whichever is lower, 35. 40, 48, 48, 48, 45, whichever is lower, 45. 40, 51, 51, 51 with 63, whichever is lower, 51. That's it. Next question. Analysis on taxable value of a let out property. This is analysis. That is a computation sheet. This is analysis. Let's see. Annual value. Annual basis. That means periodic basis we need to consider. Not on monthly basis rent. Annual value they will. Okay. Next one. Annual value is deemed annual value because even though you do not collect any rent, you have to charge it on an annual value. Next. Basic comparable. First preference is on reasonable expectation. A reasonable expectation is MVFR SR comparison. Supra means as already provided before, as already said before. Actual rent adjustment. Actual rent is then compared to reasonable rent as said earlier and consider the higher value. We said na MVFR whichever is higher, FR resultant with standard rent whichever is lower. Compare, that is the reasonable expected. Compare with the ARR minus URR whichever is higher again. Next, unrealized rent. Annual rent for 12 months you take. Unrealized rent deduct. Actual rent, annual actual rent will become after deducting the unrealized rent. Next one. I have written conditions to claim unrealized rent. Very important theoretical question. Tenancy is a bona fide tenancy. Means what? Intentionally you did not tell to the tenant, don't pay me. I will claim deduction there. He really did not pay. There is no cheating. Bona fide. Defaulting tenant has vacated or taken steps to vacate him. Means you tried your level best to vacate him. Defaulting tenant is not in occupation of any house property of the assessee. Okay. And assessee has taken reasonable steps to institute legal proceedings for recovery of unrealized rent and proved that AO that those legal proceedings are proved useless. Simply to tell 4 conditions. Yeah, very, very important. Example 6-7 times tested. When to claim unrealized rent. Whenever unrealized rent adjustment comes in question in house property, note you should clearly write down these 4 points. Okay, that the 4 conditions are satisfied. What are the 4? Tenancy must be a bona fide tenancy, no cheating. Defaulting tenant has vacated or you have taken steps to vacate him. Number 3, you did not give him any tenancy of any of your other properties. Okay. Number 4, you should have shown the assessing officer that you have taken reasonable legal proceedings against him. And even after that, he did not pay. Those legal proceedings are proved useless. Then I will allow that URR as a deduction from ARR. Property sold, very, very important exam question. Property sold during the year. Property sold during the year. If property is sold, held for some period and sold during other part, then the value shall be proportionately calculated. Proportionately calculated means what? MV, I will change the color, MV into holding period by 12 months. For example, I held it for 8 months, sold after 8 months, means 8 months used, 4 months not used. So MV will be annual value, na? That into 8 divided by 12 or 9 divided by 12, like that you need to. For each and everything you should calculate. Rent differential treatment. Rent differential treatment. Sir, what is the rent differential treatment? Sir, I never heard about this. See, I have given example. If the rent is 10,000 up to August 15, April, May, June, July, August. August another 15 days. Until 5.5 months. 10,000. Remaining balance will be there, na? 12 months minus 5.5, 6.5 months. 6.5 months you should take 15,000. Like that you should take. So if the rent is rupees 10,000 up to August 15 and thereafter change to 15,000, 10,000 shall be considered for 5.5 months. Loss due to vacancy. Loss due to vacancy shall be deductible not from direct valuation, deductible from ARR like URR, but it should be deducted at the last stage before calculating GAV. That's why what I told here in the schedule, I have given a first comparison and calculate reasonable. Actual rent receivable, basic value. Actual rent receivable or that particular value, whichever is higher, you will take that value, na? That basic value, from there you should reduce loss due to vacancy. That is how institute will do. So you go by institute. Don't do our action. Next, issues on municipal taxes. Issues on municipal taxes are deductible from gross annual value. Okay, they are deemed to include service tax component also. You should not again deduct separately. Municipal taxes levied by local authority are only deductible, not by central government. Municipal taxes are deductible only if it is borne by owner, actually paid by him. Method of accounting is irrelevant. If you pay, I will give deduction. Okay, you created a provision, payable, I will not give deduction. Actually, you should pay. Interest, I will give deduction also on accrual basis. But for municipal taxes, I will give deduction only on cash basis. Pay, take the deduction. If the property is situated in foreign country, then the municipal taxes levied by foreign local authority are deductible. Municipal taxes paid by tenant are not deductible by the owner and they cannot be even added to ARR since the payment of municipal taxes is a statutory obligation but not a rent. You can't add it to rent also. Next, illustrations on GAV calculation. Okay, let us do together. If you do these, doubts will not come in exam questions. These are all my illustrations I have given for regular classes of DT. Let us see. House 1, House 2, House 3, House 4, House 5. Municipal value 105. Fair rent 107. Whichever is higher 105. Actual rent received, actual rent 103. But 103 minus 1 we had to do 102. So 107 or 102, whichever is 105, 107, whichever is higher. 107. Standard rent not there. So we need to take 107. Okay, 107 or 102, whichever is higher. Whichever is higher. That's why we have taken 107. Okay, next issue. 105, 107, whichever is higher. 107. 107, 88, whichever is lower. 88. 88 should be compared with 112 minus 2. 112 minus 2. 110. 88 or 110, whichever is higher. 110. Okay, 110. That's it, 110. Next. 105, 107, whichever is higher. 107. Compare with 88, whichever is lower. 88. 88 compared with 86 minus 1, 85. So 88 will be selected now. 88. Next one. 105, 107, 107. 107, 135, whichever is lower. 107. 107 compared with 112. 112. 112. Next. 105, 107, 107. 107, 135, 107. 107, 96, 107. That's it. Hopefully everyone understood. Next illustration. X owns a house property. Municipal value 1,45,000. Fair rent 1,36,000. Standard rent 1,24,000. It is let out throughout the previous year. Rent being 8,000 per month up to November 15, 24. 14,000 per month thereafter. Means up to 15th November 8,000. After that 14,000. X transfers the property that is sold to Y on Jan 31st, 2025. Find out the GAV of the property. Okay, let us do this. Okay. Now, how to do the calculation? Yeah, take calculator once. Fatafat, let us do and complete this. First, property is in my hands only for 10 months. That's the first clarity. How many months? 10 months. Sir, how, sir? Jan 31st I am selling means February, March it's not in my hand. So 10 months I should consider. 2 months it's not with me. Okay, clarity. So 1,45,000 is for 1 year. So 1,45,000 into 10 by 12. 1,45,000 into 10 divided by 12. 1,20,833. 1,20,833. Like that, second one, third one also we calculated. Now what we need to do? 1,20,833 and 1,13,333, whichever is higher. 113,333. Compare it with 103,333, whichever is lower. How much it will be? 103,333. Final selection. Now you have to compare it with actual rent. Actual rent, how to divide? See, occupancy, vacancy, and sale, 2 months, no ownership, remove this. But not a owner means IFHP don't get attracted. So gone. 10 months. 10 months and again I will divide. April, May, June, July, August, September, October, November. April, May, June, July, August, September, October, November. Correct? But November fully there? No. November fully there? No, not there. April means April completed. Completed April, May, June, July, August, September, October. 7 months completed. Okay. 8th month not fully completed. 7.5 completed. So 7.5 months is occupied with a rent of 80,000. So 80,000 into 7.5, 60,000 is the rent. Actual rent received. Next, November 15th to November 15th to December 15, 1 month. December 15 to Jan 15, 2 months. Jan 15 to Jan 31st, half month, 2.5 months. 2.5 months ki 14,000. 35,000. 60,000 plus 35,000, 19,000. There is no unrealized rent. Now we have to compare this 95,000 with 1,03,333, whichever is higher you should take. 1,03,333 will be declared as a GAV. Answer completed. Next question. Next question. Let's take this question. Pause the video, see the question properly. Okay. You do the illustrations that are given in the book. That's it. More than enough. All kinds of questions I kept there. Pause the video and see. Okay, ma? So let's see. Municipal value and fair rent, whichever is higher. 68, 68, 62, whichever is lower. 62, 62 compared with 65, 65, 65 minus 1, 64. Perfect. Next. 60, 68, 68, 68, 62. 60, 68, 68, 68, 62, 62, 62, 61, 67 minus 6, unrealized rent. Okay, 62, 61, 62, 62 minus 1, 61. Next, 60, 68, 68, 68, 70, 68, 68 and 68, 68, 68 minus 1, 67. Next, 112, 117, 117, 117, 115, 115, 115 and 71, 115 and 71, 115, 115 minus 1, 114. Next, next, 112, 117, 117, 117, 115, 117, 115, 115, 115, 70, 70, 115 and 70, 115, 115 will be taken. Next issue. Calculation of GAV. Same kind of question here. I don't want to discuss, just for practice sake. This is the answer. You can just click the question, pause the question, pause the answer, you can see. Next question. All are exam questions here. These are all examination questions, past exam questions like that, changed according to the new provisions. Municipal value per annum 61, 61, fair rent 108, 130, standard rent 60, rate old tenant, new tenant, old tenant, new tenant. April to June, this is the fee, this is the tenancy amount, rent. New tenant 9,000, 2,500. Period when the property unoccupied because suitable tenant was not available. This period, this period. Actual rent receivable if there is no vacancy. Loss due to vacancy, this much. Okay. Pause the video. See for how to present the answer. Please read the question properly and try to solve the answer on your own. I will show you the answer and I will also explain. Okay, hopefully you read the question. So now see here, what is the new in this question? See, if you observe the illustration number 5, municipal value given fair rent, standard rent, old tenant, new tenant, 2 types of rent we collected. Accordingly only we should take April, May, June, 3 months, 5,000, and July, August, September, October, November, December, 6 months. 6 months. So we should take 9,000. Okay. So further way, if you have to understand, you can take calculator. 5,000 into 3 months, M plus 9,000 into July, August, September, October, November, December, 6 months. Totally 69,000. That's it. Okay, how much? 69,000. We need to take on one side. So that is the total rent receivable. So if there is no vacancy, you should have received 96. But from that 96, we have to reduce the amount. Okay, 96,000 minus 27,000. 69,000. That we also got the same. Next, same we have to do also for this. So normally you should have collected 28,500, but now you are collecting only, okay, normally. Now there is a loss in vacancy. So this is a comparable. So how to compare? 61,000, 108,000 and 60,000. 61, 108, whichever is higher? 108. 108 and 60,000, whichever is lower? 60. Clear? 60 and that particular 69,000, whichever is higher, 69,000. Here, 61,000, 30,000, whichever is higher, 61. 61, 60, whichever is lower, 60. Clear? 60 and this particular amount automatically, this particular 7,500, if you reduce, this 60 will be selected from that 7,500 here, 27,000 here, if you reduce 16,000 and 52,500. This is the answer. Pause the video and go back and check if you have any doubt. Next, we have only 2 other concepts to cover now. Self-occupied property and interest on capital borrowed. See, self-occupied property. Self-occupied property. Meaning of a self-occupied property means self-occupied property means such part of house property which is used for self-residence of the assessee. Annual value calculation. In general, annual value of SOP and vacant property wholly. Vacant property wholly vacant. See, one very, very important concept is there. In a particular year, if a property is used for self-occupancy and let out for some period, only for some part of the year it was self-occupied and some property, in that case what will happen also I will tell you. That's very, very important adjustment you need to remember. There is an amendment also for this attempt. Let's see. In general, annual value of a self-occupied property and vacant property wholly shall be considered nil. Either wholly vacant or self-occupied property, annual value will be nil. Hence, reasonable expected rent concept does not apply. Special case. The nil value benefit, supra, means as said before, shall apply only in respect of 2 house properties. For example, there is a building. In the building, 10 portions are there. 5 I gave for let out, 5 I gave for let out, and 5 in that 3 are vacant. 2 I am using for my self-occupancy. In that case, only 2 can be self-occupied. Remaining will be deemed to be let out property. Even though you do not use it for any purposes, government will charge a reasonable expected rent and ask you to pay the tax on that income. Okay. So 2 house properties will allow. That means an assessee can claim nil value benefit only in respect of 2 house properties. Irrespective of number of properties, he actually self-occupied or wholly kept vacant. Selection of house properties for nil value out of the benefit nil value of benefit out of many at the option of the assessee. Remaining will be deemed to be let out. Computation sheet for one self-occupied. Second one also you should do in the same way. Take gross annual value first, which is nil. Municipal taxes, no deduction. Why? If income is taxable, deductions are allowed. Income is not there, then why I will give deductions? No deduction allowed. Net annual value nil. Deductions will be nil. Standard deduction is nil. I will give only interest on capital borrowed. I will give only interest on capital borrowed as a deduction. Okay. Only interest on capital borrowed will be allowed as a deduction. Other deductions are not allowed. Standard deduction of 30% is not allowed. Why? Common sense. Standard deduction of 30% is allowed when NAV is there. On NAV 30%. When NAV itself is nil, where is the question of getting any benefit of standard deduction? No. Next, interest on capital borrowed. This will be given as a deduction. Note, taxable value of IFHP will be negative in this case, or else nil. If capital borrowed interest is not there, self-occupied property taxable value will be nil. If it is there, then it will become negative. Interest on capital borrowed is not allowed on actual basis. It is restricted to rupees 2 lakh or rupees 30,000 as the case may be. Okay, how much I will allow? Self-occupied property key, not for let out property. Let out property, if there is a shopping mall, person gave it on rent, 1000 crores revenue he will generate. 1000 crores key, if you give 2 lakh 30,000, where to keep? Therefore, 2 lakh 30,000 when I will give, if the house property is used for self-occupancy or completely vacant, then also I am giving deduction. That should be restricted to 2 lakh or 30,000 as the case may be. Sir, what is 2 lakh? What is 30,000? Question will arise. So before that, situational analysis with respect to self-occupied property. Property is used throughout the previous year for own residential or not let out or put for any use. 100% for residential, not let out or put to use even for 1 day. If you put to use for 1 day, you cannot claim it as a self-occupied. So property could not be occupied throughout the previous year by any reason, such as employment elsewhere, business or profession elsewhere. So property could not be occupied. Either you should self-occupy for whole of the year. Either you should self-occupy for whole of the year or kept vacant. Why you kept vacant? Because I have employment elsewhere or business elsewhere. Property is an independent residential unit with partitions, and in that SSC self-occupied one part, remaining are let out. Property is self-occupied for the part of the year and let out for the part of the year. Sir, what you are doing, sir? Situations we are going to see. 4 situations. Situation 1. Property throughout the previous year own residential or throughout the previous year not let out. Situation 1. Property could not be occupied because of employment or business elsewhere. Property is independent residential unit with so many portions. Okay. One is self-occupied, remaining are let out. Then what to do? 4th one. Property is self-occupied for part of the year and let out for the part of the year. It is important for exam. If it is let out for part of the year, that's all. Self-occupancy benefit will be gone. Even 1 day if you let out, I will treat it as let out property only. I will not treat it as self-occupied property. Means let out intention is important. 1 day you gave it for let out, that's all. Full year I will treat it as let out property only. You will calculate reasonable rent and tax accordingly. Tax treatment. Situation 1 ki tax treatment. House property throughout the previous year. Section 23 to apply. Annual value of 2 SOPs will be treated as nil, and vacancy can be any reason. If the assessee retains exclusive control over the possession of house owned by him, then it is said to be self-occupied property and not as vacant property, since it is constructive possession. Next, this is not required. Mainly, house property self-occupied throughout the year. Annual value will be taken as nil. That's it. One adjustment done. House property not occupied and kept vacant throughout the year. Not occupied and kept vacant throughout the year. Same concept. Tax treatment is same as situation 1. Next. Part is self-occupied, part is let out. Part is self-occupied. Okay. Then you will do as per. Then you will do part is self-occupied. See, 5 portions are there. 2 portions are there. One self-occupied, one let out. Then what to do? Part that is self-occupied, same as step 1, step 2. Okay. Part that is let out, topic 7, let out property. Previously we read already. That one will apply. Last one is very, very important. That's why Bare Act quotation also I have given here. Property self-occupied for some part of previous year, other part is let out. Then what to do? In this case, benefit of 23(2) is not available. Calculations are made as if property is let out throughout the year. The annual value shall be taken as nil if owner occupies for his self-residence. Okay? Annual value. The provisions of subsection 2 shall not apply. This will not apply. If the house or part of a house is actually let during whole or any part of previous year. Okay, that's it. Next, very, very important, another adjustment, unrealized rent adjustment. Unrealized rent adjustment. Okay. What to do in case of unrealized rent? See, simple point. Whenever you realize unrealized rent, which year you realized it, that year it will become taxable. Okay. See, unrealized rent means what we are doing? We are reducing it from the annual rent receivable. Means your annual value is coming down. Your annual value is coming down. After 4 years, you are realizing it. Since it is not taxable in the previous years, now you will tax it. But there is one catch point here. When you don't take unrealized rent in the past years, standard deduction also to that extent you might not have taken. So now standard deduction will be given. 30% will be deducted. That's why arrears of rent or unrealized rent realized subsequently. Receipt shall be by the assessee only and not by legal representative. It shall be deemed to be the income from house property. Okay. Next, even if you do not hold the house by that time, since income is received, they become taxable. 30% of the amount received is allowed as a standard deduction. This is not that important. Deductions, only 2 deductions are there. Next, very, very important adjustment, interest on capital borrowed. Interest on capital borrowed. Hey, listen, 1 minute I will complete everything in interest on capital borrowed, but listen carefully. This chart is a golden chart here. If you understand this properly, perfect. See, special emphasis on interest on capital borrowed. Capital borrowed can be for 5 purposes. Acquisition, construction, repairs, renewal, reconstruction. Okay. Acquisition, construction ki self-occupied property will allow 2 lakhs. Self-occupied property will allow 2 lakhs. For these two, self-occupied property will allow 30,000. But if it is a let out property, actuals, whatever you have to pay, I will allow as a deduction. Listen again. If it is a let out property, actuals I will allow. What I will allow? Actuals I will allow. Let out property, even pre-construction interest, actuals I will allow. Because you are anyway getting taxed for the full amounts, actual I will allow. But self-occupied property is dangerous. See, deduction will be allowable as under repairs, renewal, reconstruction. Okay. Self-occupied property not exceeding 30,000. LOP ki, let out property ki, actuals I will allow. Next, listening, if I am using for acquisition, construction, pre-construction period, for 5 years I will allow in equal installment. About this, 10 minutes small short video I will make, like what I have done for law. Okay. There you can understand, because I have given examples also. Different scenarios. How to understand a pre-incorporation interest, pre-construction interest. I'm very sorry. Okay. I have already written one note on that. 10 minutes I will discuss that. That separate discussion I will make. Just listen whenever you find it, before you sleep. Listen to that and go. You will definitely remember in subconscious mind. Sir, anyway, if it is for acquisition or construction, if it is post-construction, self-occupied property, 3 conditions are satisfied, then 2 lakh will be allowed. 3 conditions, like any one condition not satisfied, 30,000 allowed. Even in case of construction and acquisition, what are the 3? Capital borrowed on or after 1499. Obviously, we'll borrow after that only. It should be for acquisition, construction. Already I said here, completion should be made in 5 years. You should complete the property construction within 5 years. Then only I will allow you. Okay. So, what is the logic here? Self-occupied property 2,30,000 depending on the situation. Let out property actuals I will allow as a deduction. Okay. How much interest on capital borrowed is allowed? Actual amount paid as interest on capital borrowed will be allowed. It will be allowed on accrual basis. Pre-construction, I said, I will discuss separately for 10 minutes. A short video I will make and I will put. Okay. This is all about income from house property. After listening to all these things, your duty is do 5 questions. Even if you don't do, at least peruse. Go and see 5 questions. What questions? This attempt RTP, last attempt RTP, and study material 3 questions you do randomly. Okay. Whichever you feel tough, do those questions. You are done with house property chapter. Go to the next one. Okay. My next revision will be on PGBP. Thank you very much.